Good evening, everyone, and thank you for joining us today for Infosys Q4 FY20 financial results. Thank you for your patience, and we apologize for the delay. I'm Mehak, and on behalf of Infosys, I'd like to welcome you all to this press conference. I want to start by saying that these are unusual times, and we hope you, your family, and your dear ones are safe and well. Before we begin the conference, I would like to share a few points for our attendees today. Please note that all journalists will be on mute by default throughout the press conference. You will be unmuted when your name is called out for asking a question. Should you drop out, please rejoin using the same invite link. And with that, let me invite Mr. Salil Parekh, CEO, Infosys, to give us some highlights of the quarter gone by. Salil, over to you, please.
Thank you, Mehak. Good evening for everyone that's joined this video-based press event. As Mehak said first, apologies from our side for the delay. I trust each of you and your loved ones are safe in this environment in these times. There are several things that I want to share with you, so slightly longer opening set of comments. Among the 4 points that are critical for us, first, we've had an exceptional strong financial performance in the year that's just completed. I'll share some highlights. Second, we've done a transition into this new environment in a very efficient and accelerated way, and I'll give you some highlights of that. We see some near-term challenges in the business environment, and we also see a strong level of confidence that as we go through this in the next few quarters, we will emerge stronger from this at the end of it. The financial year that just ended was truly exceptional for us. We grew at 9.8% constant currency, delivered 21.3% operating margin, grew our digital revenue by 38%. And now in Q4, it's become 42% of our overall business. We did all of this with $9 billion of large deals for the full year. Our earnings per share grew at 8.3% in dollar terms. We had the highest cash collection in Q4 and indeed for the full year, the fiscal year that just ended. In Q4 as well, we grew by 6.4% constant currency year on year and delivered 21.1% operating margin with $1.6 billion in large deals, some of which were in the last 2 weeks of March. We closed the year with a very strong cash position of $3.6 billion with no debt on our balance sheet. As the last 2 to 3 weeks of March saw the impact of COVID, we had activated our business continuity plans with an intense focus on employee safety and client service delivery. We today have 93% of our employees working remotely. We believe this transition was handled exceptionally well, and several of our clients have shared this feedback with us. I'm proud of our team that has worked literally around the clock to make all of this happen and ensure that our clients' service delivery was going on while we maintained absolute employee safety. We anticipate near term there'll be challenges in the business environment across a wide set of industries. However, we see increased interest from our clients in the area of cloud, virtualization, cost reduction programs, workforce transformation. Our discussions with clients already indicate to us that they want to consolidate their work with a strong player like us who has exceptional delivery, 93% remote working, and a strong financial balance sheet. Let me now talk a little bit about our efforts to help broadly the communities that we live and work in. Via our foundation, we have already dedicated ₹100 crores towards relief efforts, including half to the Prime Minister's CARES Fund in India to help enhance hospital capacity, provide treatment, ventilators, testing kits, PPE for frontline health workers and everyone within the hospital environment. In the US, we've opened Pathfinders Online, an online learning platform for teachers, school children, and their families, so they can access high quality computer education from home for free. Coming back to the business, given the uncertain environment where the global pandemic and client business is marred by volatility, we do not feel it will be appropriate for us to provide an annual guidance at this stage. As a result, we are currently suspending providing guidance for revenue growth and operating margin for financial year 21. Given our strong performance in the just concluded financial year and our strong cash position, we are pleased to announce our final dividend for the financial year at rupees 950 per share, bringing the total dividend for the financial year to rupees 1750 per share. I'm extremely grateful to all our employees for their diligence through this stressful period and proud of the work that they've delivered for our clients. While we are unsure about what lies immediately ahead, we have enormous strengths that will help us navigate this period and emerge stronger from it. First, a sustained focus on client relevance. We are realigned to what our clients are looking for in this new phase. Our ability to work with clients across the entire spectrum of their needs, including accelerating their digital journey and extreme automation for cost efficiencies. A highly skilled employee base of 240,000 employees worldwide, passionately working to make our clients successful. Unparalleled delivery capabilities, and our 3.6 billion in cash on our debt-free balance sheet, which gives us ample liquidity. With that, I close my opening comments. Back to you, Mehak, and open for questions. Praveen, Nilanjan, and I are happy to take those.
Thank you, Salil. And with that, we'll be opening the floor for Q&A. We also have Mr. Praveen Rao, CEO Infosys, and Mr. Nilanjan Roy, CFO Infosys, joining Salil for this Q&A session. As always, can I please request everybody to ask one question per person only? So let's begin. Our first question today is from Agam from Bloomberg Quint.
Hi, Salil, Praveen. All are well. My questions to you all are, Salil, to you is, how have things changed already when it comes to the last couple of weeks of March and April, when it comes to demand for services and products? What's the client sentiment like in terms of tech spends? And is this towards keeping businesses running, or has the pandemic accelerated adoption of digital services? Praveen, my question to you is, can you shed some light on the supply side of things? How's March and April been in terms of Infosys' ability to service clients? How is the workforce and tech being adapted to the new environment, and what are the challenges that still remain? And Nilanjan, my question for you is, are you seeing or expecting pressure on pricing, requests for higher discounts or extension in payment periods? How does that impact financials in the near term? Perhaps some pressure on margins, if you could elaborate on that.
Thanks, Adam. The first point or first part of the question that you talked about in terms of demand, many of us, including me, have been on several discussions with client CEOs and CIOs. Some of those discussions are focused on how can we help them in this situation for increased virtualization, part of the digital journey to cloud. We have discussions ongoing with a manufacturing client which look at how do you make all of this faster given everyone's working remotely. And there's also discussions on how will you consolidate some of the smaller players that are in their mix so that they can have someone that they can really depend upon and trust in this really complex delivery environment of remote working, high security, so there are no security lapses. So those are the sorts of conversations that I've been having. I'm quite encouraged by what that means in the medium term. Of course, we do see that in the short term, there will be some slowing in the way the business evolves.
Thank you, Salil. Praveen, can you take the next part of the question, please? Would you like Agam to repeat his question?
I can go ahead. In terms of enablement, we have today globally 93% of our employees today working out of home. Its percentage is higher on IT side and slightly lower on the BPM side. We have been able to achieve all this in a span of 3 weeks' time, and which is very remarkable. The feedback that we have got from our clients on the speed and agility in which we have done and the resilience demonstrated has been very, very encouraging. Now, our people are now getting used to the new normal. It took a few days for them to get adjusted to this. Obviously, we had to do multiple things to enable this. We had to upgrade our networks to handle this high level percentage of people working from home. We had to provide dongles and other equipments to some of our employees who had problems in the last mile connectivity. We supplied UPSs as well, where people had problems with power and so on. We have also had to enhance our security controls as well, so that we do it in a very secure manner. So far, our experience, the feedback from the employees also has been positive. We have not seen any drop in productivity as such once people have got used to it. So I think people are getting adjusted, and in some sense, our belief is once things come back, I don't know whether it will come back to the same normal, it will be a new normal, and there will always see some element of work from home.
Thank you, Praveen. Nilanjan?
Thanks, Agam. Regarding your question on client credits, yes, we have seen some requests for extension of periods, but nothing overtly concerning. In fact, during the month of March, we had a record collection as well. So we had a lot of our quality clients continuing to pay us on time. And as we look ahead, of course, we have to watch this space carefully. From a near-term perspective, as Salil mentioned, there could be margin pressure coming in from the top line and on the cost side. But I think we have already started taking some no regret moves towards this space. For instance, we stopped hiring temporarily. We've also frozen any salary hikes. We've also temporarily suspended all promotions. So these we believe are no regret moves. We have tremendous other cost levers, which we will see in due course. Of course, our strategic cost levers about automation, about pyramid, about on-site offshore continue unabated. These helped us in the long run and continue to support our margin structure as well.
Thank you, Nilanjan. Thank you, Agam, for those questions. Our next question is from CNBC TV 18. Mukta Warrior, please. Hi, Mukta. Is Mukta there? Okay, while we wait for Mukta, can we move to Chandra from ET now, please?
Yeah, hi, this is Chandra from ET now. I hope you can hear me.
Yes, Chandra, a little louder, please.
Yeah. Thank you so much for taking my questions. Salil, the first one to you. All the IT CEOs we spoke to in the last week said that they are already seeing cuts on discretionary budgets. Now, considering Infosys derives, I think 30% of its revenues from consulting and package implementation, are you at a higher risk? One US analyst we spoke to just a while back said, 30% of Infi business could disappear. Now, while that sounds very alarming, can you give us some sense of what you're seeing here? And, do you expect a recovery, say, 2-3 quarters from now, maybe by Q3 of the current fiscal? Another question to you. In the opening remarks, Salil said that cost control will be done with rigor. Can you elaborate on what you've done with respect to freezing salaries, freezing hiring? What happens to freshers? Will you honor all the offers? Will there be retrenchments? Praveen, a question for you. Can you tell us specifically the sectors and the industries and geographies where you're seeing maximum pressure now, perhaps, where the epicenter of the COVID is currently happening? If you can take us through the specific stress points. Thank you, everyone.
Hi, Chandra. Let me start off. And on the On the offers and the people side, Praveen may share some views, and then Nilanjan, given the questions that you've asked. In terms of discretionary, I don't have a sense of how we are relative to others. The point that you asked, what I can say is clearly there is concern from all the industries across the world in every geography. However, we first see an impact in a few of the industries. Praveen will share a couple of those with you. We see some of those discretionary work areas coming under pressure. We definitely see that showing up in Q1. However, it's not that everything has stopped. There's some examples where I shared a little bit earlier at the opening about virtualization or some of those cloud-related workforce transformation type of discretionary projects. We do see that. We had some large deal signings in the last 2 weeks in March. We've already had some signings in these first few days of April, which we will talk about obviously at the end of the quarter. So in that sense, there is definitely some slowing, but there's also some areas where we see some move. In terms of the timing, I don't have a sense, we don't have a sense today whether this is a couple of quarters or more. We'll see how that goes. We are absolutely clear that what we have is enormous strength in how to leverage this as we go through this. And then with a strong balance sheet and our clients looking to really consolidate with players like us who are amazingly strong on delivery, 93% remote working, high security, we feel that we will be even more successful as we come out of this. Praveen, over to you, please.
Okay. In terms of hiring, we will honor all the commitments we have made, both to campus sites as well as laterals. Now, coming back to segments, obviously in the near term, all the segments will be impacted one way or the other. Obviously, some segments are more impacted than the other. For instance, retail, travel and hospitality, energy, oil, those are probably much more impacted. But even in some other sectors also in the short term, you will see some impact. For instance, in the financial services, they will see impact of lower interest rates. In the banking sector, they will have to deal with deferred loan payments. In the insurance sectors, they will have to probably deal with new clients. They will also have to live with lower premiums. In cards and payment space, obviously they will struggle because there is less activity in retail, in leisure and other activities. So similarly, when you look at like for instance, manufacturing in the last few quarters have anyway had some impact because of the trade wars and other things. And now their impact is much more huge. They are having challenges both on the demand side as well as on the supply side. And with all the factories closed, supply chain broken, they are struggling. The same impact with all the factories closed, the industrial manufacturers also having similar impact. Similarly, in the aerospace industry with reduced travel, some of their clients have deferred some of the purchases of planes and other things. So manufacturing, even across all subsectors, are impacted in a big way. Communication, if you look at communication, they are doing reasonably well. I think telecom will do well. But media and entertainment will have challenges because of reduced outdoor activities and reduced ad spend. And similarly, on the 5G rollout, if you look at 5G rollout, we feel that there may be some delay in the rollout. And also some of the use cases of 5G applications in B2B also may get delayed because corporates will not now start looking at relooking at capital allocation. So net, I can go on sector and sector, but I think in the short term, you will see some impact of the other. And this is true geographically as well. I mean, I don't think any geography is spared of this pandemic.
Thank you, Salil. Thank you, Praveen. And thank you, Chandra. I'm going to try Mukta once again. Mukta, I hope you'll be able to hear us this time.
Yeah. Can you hear me now?
Yes, loud and clear.
All right. Hi, Salil. Hi, Praveen. Hi, Nilanjan. Good to see you all. Salil, this question was already asked. You said that you're not sure when, whether in the next few quarters, when you expect to see the recovery. But, like it was mentioned, management at other companies are expecting the impact, the peak of the impact in Q1, and it's likely to also play out in Q2 and recovery only by Q3. So is that a timeline you are seeing, or are you not really confident to call it out yet, saying you're going to see recovery in Q3? And, on a different note, last month while Infosys said that, you don't expect any further action on the whistleblower case from the SEC, we understand SEBI is still investigating the issue. So, is that investigation still going on, and what timeline are you working with? And even on deals, you said that you signed a few large deals in the last few weeks of March. You also have a few this month. So are you confident of deal wins? I mean, are you expecting any slowdown in deal wins going forward? Nilanjan, my question to you is if you can highlight what the impact of the COVID-19 crisis and the lockdown was on revenues in Q4 in terms of, BPS, and what are you estimating for Q1 of FY21? And Praveen, some employee-related questions to you. Of course, you did talk about, honoring offers, etc. But will there be any furloughs and layoffs, etc. in the offing? And you said that about 93% of your staff is now, working from home. And given that the lockdown will continue till May 3, and states which are ready to open to IT companies for 50% capacity are also not really going to do that. So are you factoring that in till May 3rd? And lastly, in your release today, you have said that several employees of Infosys have been tested positive, and that you're contact tracing among employees, etc. Can you give us any numbers or any more details on that?
Mugdha, let me start off. This is Salil. I think the first point you probably talked about was the timing. As I shared earlier, our sense, of course, is in the near term, we see impact on our business. We don't have today a clear view of when the recovery comes back. There are many different perspectives that people have. We've obviously been interacting with our clients and looking also in the main geographies that we operate in. It is also a function of how, from a medical perspective, the situation will evolve. In terms of the demand, I think we shared again a little bit before. We see some near-term impact, but we feel we're extremely well positioned as we come out of this for a lot more of the consolidation and a lot more of this cloud virtualization digital play, plus all the automation activities which relate to cost efficiencies. I think those are the ones you'd ask from me. Praveen, over to you, please.
You asked several questions. Let me think. One is on the employee side. As we said, we will honor all the commitments that we have made, both for freshers as well as laterals. We are not really looking at any layoffs, COVID-related layoffs at this stage. However, some of the involuntary actions we have been taking in the recent past will continue. These are all really performance-based exits. For now, we have suspended any promotions or increments for the year. We will revisit as the situation evolves. And obviously, we are not looking at furloughs, but we will also look at. We are also looking at many other initiatives to bring cost under control, and Nilanjan had already elaborated on those. From getting back to work perspective, obviously. The lockdown has been extended. In some places, there's a gradual relaxation plan. We operate from multiple locations. Our plan is to come back in a very gradual manner. We are not in a hurry to come back to work aggressively. In phase 1, we expect maybe less than 5% to come back to work in offices. This will probably last 3 to 4 weeks. Then in the next 4 to 6 weeks or 8 weeks, we will probably up it up from 5-10% to maybe 15-20% or so. So we want to do it in a very gradual manner. And even for people coming from work, coming to work in offices, we will have very high standards of safety. We will practice social distancing. We will do temperature checks. We will be very high standards of hygiene and sanitation. Social distance is not only in workplace, but while in commute, in common areas, and so on. And we'll also explore whether we can set up some kind of testing facilities in the office as well, subject to availability of test kits and so on. So we are already started thinking about getting people back to work, but we will do it in a very, very slow and calibrated manner, keeping the safety of employees as the highest priority.
Okay, Salil Mugda has requested me to ask you about the SEBI question again.
Oh, yeah. Let me, sorry, that was part of the questions as well. I think first on the SEC, I'm extremely happy with the outcome. Obviously, for the company perspective and a personal perspective, it was a very clear sort of statements that we'd made, I think, a few weeks ago. On the SEBI, we have provided all the information that SEBI has requested, and that's the comment from that perspective. There's nothing else that we need to provide at this stage to SEBI.
Thank you so much, Salil, and thank you, Praveen. Before I take my next question, can I please request everybody, in the interest of time and to be fair to everybody else on this call, to ask one question per person, please. I would be forced to intervene if we ask too many questions. I'm so sorry. Okay, our next question is from Megha from the Economic Times.
Yeah, hi. Thank you so much for taking my questions. So the first question I wanted to ask was that, is this the first time Infosys has suspended guidance, and can we expect to get some guidance in the second half of the year? I also wanted to understand, how does Infosys plan to use the cash on books as being cited in the press release? Do you expect to see the global recession throwing up some opportunities for acquisitions, and if yes, in which segments? And Praveen said that you will be honoring your offers. Is there a timeline on that? Can we expect some deference of a couple of months or quarters? And sorry, my last question is, do you see vendor consolidation, and how do you see benefiting from that? Thank you.
Okay, let me start off. I think I remember a few of those. The vendor consolidation, we absolutely see that. I mean, it's interesting already in the discussions I've had with a couple of client CEOs, one of the CIOs. We've started to hear this. It's to me really going to be an incredible opportunity for us, because we have the strength both from delivery and a financial perspective. So really in the medium term, we think this is an extreme positive for Infosys. I think you asked about whether we see any change with the guidance. You were breaking up, but I think that was a question. I think the view we have today is we've suspended guidance because we don't have a clear view for the full year, as in when we see that. So I don't have a view that we'll do it in X quarter or Y quarter, but obviously as in when we start to see that we are only suspending guidance, we will obviously then change that to bring it back. Praveen, over to you, please.
So in terms of onboarding timelines, for campuses, we have always onboarded them in a phased manner. So that's a practice we will still continue. For laterals, we will onboard as and when we find there's an opportunity. We have already onboarded quite a few remotely during this lockdown period as well. So that's something we will continuously plan and see how best we can expedite onboarding of laterals.
Thank you, Salil. Thank you, Praveen, and thank you, Megha. The next question is from Nikita from Cogenesis.
Hi. Salil, if you could just throw some more light on the project deferrals that you have mentioned and the kind of impact that it will have on margins. And will there be any change in the hedging policy considering the sharp depreciation that the rupee has seen recently?
On the hedging, Nilanjan will come back to that in a few seconds. On the deferrals, we obviously see that, as I shared a little bit earlier, but we have not at this stage provided at least externally a view of what the quantum of that is. We are working our way through it and making sure that all of the work we're doing for our clients fits in with their current needs, and we remain fully relevant to them. We will obviously have some impact on margin, but we are not externally quantifying that at this stage. Nilanjan, over to you, please.
So as regards the hedging policy, I think we have a very robust treasury policy which defines the limits under which we hedge. So we will continue to monitor the situation and take appropriate action. So it'll be premature to tell me whether we'll change the policy or not, or the amount of hedges we take.
Thank you, Salil. Thank you, Nilanjan. And thank you, Nikita. Our next question is from Business Today, Rukmini Rao.
Sure. Sir, thanks for taking my question. One, I want to understand in terms of the playbook, how different is it going to be in terms of how the companies are dealing with this crisis compared to the global financial crisis? And also in terms of the newer opportunities that are arising out of this pandemic, where exactly are the bets right now? Thank you.
I think in terms of the playbook, my sense is what we've really focused on is there will be some sort of a recessionary environment. It's unclear for the duration. So that's the playbook that we will deploy. We'll be extremely careful with the way we look at our costs. We'll be extremely rigorous on our operational stability, and especially given the specific objective of the safety and health of our employees. We'll be extremely careful on how we do remote work with security. And in terms of really what our clients are looking for, is what I was sharing earlier. There is a lot of thinking around cloud, virtualization, workforce transformation. These are things that help companies to become more digital in this remote working manner. And there's also focus on automation, on cost efficiencies, on consolidation, on looking at whether companies want to keep their captives or want to have someone else look at it. So those will be the sorts of opportunities we think will be more in the market. And again, given our strong delivery and financial position, I feel in the medium term, obviously the near term is going to be quite difficult, but in the medium term, we'll be really much more successful and come out of this stronger.
So just a little bit understanding around...
I'm so sorry, Rukmini. I will not be able to allow any follow-up questions. We have to be fair.
Mehek, I just wanted just some understanding around in which business segments is this automation and the traction that Salil is talking about coming from. Just a little bit of clarity on that. Thanks.
So Rukmini, that's coming across all industries, because you can imagine we've had such a successful approach to automation over the past several years within Infosys with our clients, and that we feel that that'll be even more relevant in this new environment for the new playbook.
Thank you, Salil. Thank you, Rukmini. Our next question is from Ayushman from Mint.
Hi, my question is for Salil, essentially. So, primarily, I mean, do you see any opportunities amid the crisis in verticals such as healthcare, life sciences, consumer goods, which are relatively could be actually growing? And what's your strategy to sail through the crisis in terms of customer retention? Right. Thank you.
I think the segments you mentioned, there are within those segments several companies where we see opportunities. We have some presence in those segments, and within those areas, we are absolutely looking to make sure we expand. We see, for example, some work in pharmaceuticals. We see some work in what are called consumer staple companies. We also see some work, as Praveen shared earlier, on telco, even some on high tech. So we do see there are some of those segments which have some positive interest, even in this sort of an environment. In terms of sailing through, I think our focus is really being extremely close to our clients as their needs are changing in this environment, making sure we have complete client relevance, and then driving through this operational focus to make sure with the safety of our employees that we are driving all of the remote work as efficiently as we can. This is a time where we're spending even more time with our clients, me doing more sessions, all of our senior leaders doing, on a daily, weekly basis, lots of discussions with our clients to make sure we understand what it is that they're driving through, the challenges that they're facing, and be a partner through these times with them.
Thank you.
Thank you, Salil, and thank you, Ayan, Ayushman. Our next question is from Debashish from Business Standard. Debashish? Hi, Debashish, can you hear us? Okay, so while we will try Debashish again in some time, let's move on to Ayan from ET Prime. Hi, Ayan. Okay, moving on again. Ayan sent a question. Let me ask. Ayan, I will ask on your behalf. So Ayan's question is this, Salil, have you made any changes to your delivery model as a result of this shift? If yes, could you elaborate, and are any of those changes likely to be long-term?
I'll start off and Praveen may add a little bit to it after that. In terms of delivery model, as all of us have shared, we've exceedingly fast moved to the remote working model. As Praveen was sharing a bit earlier, we are now looking at how some of these aspects can be part of a medium and long term, both keeping in mind safety, but also the efficiency of this model. The thing that we'll be more watchful about is security. We want to be absolutely clear that whatever we do also takes into account cybersecurity and we don't fall into any lapse there. Praveen, if you want to add anything else, please.
I think from a delivery model perspective, there are not too many changes other than getting adjusted to the new ways of working, remote ways of working. So there will be a lot more investment and usage of collaborative tools. There will be much more frequent interactions between managers and people. There will be a lot more of adoption of agile practices and so on. So many of those things are probably practices which we have always done in a regular environment. Now we have to start probably using tools much better and do things in a much more secure manner. And obviously from an individual perspective, you need to be probably much more disciplined because you're working from home. You need to clearly carve out what is working time and what is personal time. And I mean, those kind of adjustments one has to do. But again, it's as I said earlier, after a few days, we have seen people get adjusted to the new normal in a very seamless way. So I think we will continue to invest in tools which will make things easier for people. But I don't see any far-reaching change from an overall delivery model perspective.
Thank you, Salil and Praveen. Our next question is from Sharon from IANS.
Hi, can you hear me?
Yes, Sharon, loud and clear.
Yeah. I want to know how much is Infosys benefiting from a weakening rupee on export realization, and are you reading the volatility in the forex market and its impact on your billing and realizations?
Nilanjan, you want to go ahead?
Yes, I'll go ahead. So for the quarter just gone by, we gained about 2% on the rupee depreciation, and that flew into margin. So we got a 50 basis points margin benefit. Of course, the rupee after the quarter also has continued to depreciate. So we will see how the impact flows out for the quarter as well. As you know, most of our billings is in foreign currency. 97% of our billings is in foreign currency between euro, pound, Australian dollar, and of course the US dollar. And we will see that realizations. But all our reporting, as you know, is in dollars. We hold ourselves to a dollar reporting regime. So from that perspective, of course, we continue to monitor the dollar movement.
Thank you, Nilanjan, and thank you, Sharon. The next few questions that we have are from Mini. I'm going to read them out. The IT industry in general seems not in a hurry to return to offices and campuses. What percentage of Infosians are working from home right now? And are you and your clients happy with the current business continuity and employee productivity? The second question is, has there been any security compromise, threat issues reported around work from home? And the last question is, do you think work from home can be continued as a regular HR practice even after the pandemic? If so, what portion of the workforce can ideally work remotely?
Let me start off, but Praveen's really addressed many of these points, and he might add a few more highlights. The statistic we've shared: 93% of our employees are remotely working today, and it's a model that we've moved to with extreme speed, but also with extreme care, keeping both employee safety and security in mind. Praveen, if you want to add other things from the question, please.
I think, as I said, we have proven technically that work from home is possible. So from that perspective, what percentage we will eventually settle really is academic. My own sense is from a business continuity perspective, over a period of time, we'll always have some percentage of people working from home. So that in the event of dealing with such situations in future, you will be able to seamlessly switch between work from office and work from home. And from a security perspective, obviously, you have to invest much more in security controls when you're working from home. So that's an area where all of us in the industry have to invest a lot more. But apart from that, I don't think there is any negativity. And I mean, it's been a few weeks since we have seen work from home, and from a productivity perspective, we have not really seen any positive or negative. I think productivity has been usual. I mean, in the initial phases, people had to work longer, but then in many of us, you are saved on commute times, because in many cities, people used to spend a lot of time in commuting. Now they don't have to spend that time. But again, there's a question of getting used to it, getting into the rhythm. Once you get into the rhythm and once you become comfortable in using tools and technologies, I don't expect any impact on productivity. Only thing is we have to just watch out on the security aspects of it. There will be a lot more phishing attacks and other things. People have to be disciplined and in terms of dealing with that.
Thank you, Praveen, and thank you, Salil. Our next question is from Shilpa from Times of India.
Hello, sir. Thank you for taking my question. Can you help us understand what are some of the levers that you have to optimize your cost structure to align to the new reality? And your headcount has dropped by 1,000. 1,000 odd. Can you explain what are these employee-related actions? And third, Cognizant malware attack has really got the industry together to address some of the security challenges. Has some of the work in areas especially related to BFSI moved to Infosys?
Hi, Shilpa, Salil. I think there are different questions. So maybe Praveen will answer some of the ones which are related to security and what we're driving through there. And Nilanjan will answer some of the points on our cost approach at the high level. Please go ahead, Nilanjan.
Yeah. So I think in the near term, Shilpa, you will have a supply and demand mismatch because you already have geared up for the volumes for the first quarter, and that's pretty much across the industry. So the sudden stop in the world economy for the short term will have an impact, as you will see an impact on the top line. We have already enabled, like Praveen has said, 93%, and over the period, of course, that part will go up as well. But having said that, we will see some of the demand side drops coming in, and which will impact the near term. Now, from a margin perspective, people being our biggest cost, we have to see our utilization going up because that will see a drop in the near term. So the moves I've already mentioned, what we call no regret, which was moving out the offer dates for new joinees, freezing promotions, our salary hikes. I think those what we call no regret moves have already happened. We will see other levers which we have. So discretionary cut in expenditure, travel by nature has come down. It's a big part of our cost. Other discretionary expenditure also we will look at as the situation evolves. CapEx, for instance, for us, last year we spent close to 450 million. That will also come down. So we will make all these moves, and some of them have already been in place. And of course, as the situation evolves in quarter one, we will see what more we have to do in the future.
In terms of headcount, I don't think we should read too much into it. It's not a secular trend. Obviously, because of the COVID situation, we had lower utilization, and we also deferred some onboarding. So that probably resulted in maybe a lower headcount in quarter four as compared to quarter three. So I don't think we should read too much into that. In terms of security, yes, we are aware of the incident, the ransomware attack. We have actually looked at our own networks, and we have found out that our networks are secure. We have invested in advanced threat protection software, which are deployed at all the endpoints as well as in the network. And we also continuously engage with advanced threat protection agents as well as threat detection advisories. And we have monitored our networks very closely. We have not really found any evidence of any breach in our networks. Having said that, this is an area where all of us need to continue to watch out for. We have to continue to be prepared, invest in technologies, and make sure we are able to detect and defer any breaches to our network. And that's an ongoing effort.
Thank you, Praveen, and thank you, Nilanjan. Thank you, Shilpa. Our next question is from Swati from Money Control.
Hello, sir. This is Swati from Money Control. Just a couple of questions. One is regarding the hiring. So you had mentioned you would be, how many offers have been made in FY21 in the last year? And since you mentioned you would be honoring all the offers, could you give a quantitative number on how many offers were made? And can you also give a split up of voluntary and involuntary attrition? Your attrition I see has gone up compared to last quarter when it was 19.6. It has now gone up to 20.7. It would be great if you can give some sense of that. And one last question about the fresher onboarding. So with the Mysore DC closed, so how will the onboarding take place? Will it be virtual like it is now? I understand that the Infosys has the custom of offering internship in the final year in colleges. So if you can give some of that, will also be great. And Mr. Legend, he mentioned that the cost, which is a large part of your cost, has come down. Is that something that would be more permanent? The bringing down the travel cost now that you have technology to bridge the gap, would that be more permanent? The bringing down the travel cost overall.
I will.
That's all from my side.
I'll probably start on the employee side. In terms of onboarding, it's only a small percentage of people we are yet to onboard from the campus size done last year and a few lateral, so it's not a significant number. For the coming year, FY21, we are planning to make about 35,000 plus offers. And as I said earlier, we typically onboard these people over a period of time, and that practice we will still continue. Now, at the time of COVID and around the lockdown period, we had about 10,000 people undergoing training in our Mysore campus, out of which 3,000 were interns. I mean, these are people who are studying in the final year. So for those interns, we made sure that they were able to complete the assessment before we release them back to their homes and colleges so that they don't have any issues in completing their degree from this perspective. For the trainees, remaining 5,500 to 6,000 trainees, we have sent them back home, and now they have started continuing the training remotely. As you are aware, we have invested in our Lex platform, which provides us the ability for anyone to learn anytime, anywhere, 7/24. So that platform is now extremely useful, and using that platform, people can access learning content. They can instruct, they can interact with instructors. There are regular assignment quizzes, there are assessment certifications, and so on. So we have enabled remote continuation of education, and that will continue. So we should be able to complete the remaining part of training for this 5,500 plus people.
Thank you, Praveen. Moving on, our next question is from Sankalp from Reuters. Again, in the interest of time and to be fair to everybody, can I please request you to ask only one question per person, please? Sankalp?
Hi, good evening, gentlemen. Salil, I have two very quick questions that are just really related. One is that when you came in 2018, you laid out a 3-year roadmap, and this was supposed to be the year when you started gaining momentum. So my question is that, this pandemic, how behind is it going to push Infosys in terms of gaining momentum? And when I talk about momentum, it also means that you said short term is going to be difficult. So are you going to offer any discounts to clients or flexible pricing this year to maintain that? That's my first question. The second one is in terms of BFSI, US banks, are they cutting tech spends or freezing budgets? This is specific to BFSI. I mean, Praveen, you can take that, or Salil, you can take it. Thanks.
So Sankalp, yeah, we had a 3-year plan. I think fortunately we saw good acceleration already last year. If you see the numbers, the fiscal 18, we were around 5.8% growth, then 9%, then 9.8%. And that's real significant acceleration. Digital growth over 38% for the year, and now 42% of the business. So in my way of looking at things, we'd achieved many of the objectives we'd set out to achieve. A very good, strong, cohesive, stable leadership team, and all of the business benefits that we have. In fact, I think that's what's going to help us in this next phase. While I have no view today of how long this phase will be, we are very clear that we have all the tools within Infosys to make sure that we become even more successful as we come out of it. Because we've already had a really nice growing business, a very strong digital footprint, good leadership team working well together, and now an extreme efficient way that we've worked in this transition to get us to 93% remote working. We believe that as things start to come back, we are the best positioned as we consolidate to the strong player, again with a strong financial balance sheet. So my own sense is, yes, the near term will have its challenges, and those challenges are something which all of us see every day when the global economy is almost at a standstill. But as that starts to ease, whatever time frame that takes, we start to see more and more strength for Infosys.
On the BFSI side, as I said earlier, every sector in the near term will have some impact or the other. However, it's too early to say specifically or quantify the kind of impact. For instance, in the BFSI space, if you look at insurance companies, obviously they will be looking at lower premium collections, and they will also be staring at higher claims. So they will be impacted in some sense. If you look at banking sector itself, they will be impacted with lower interest rate and probably some loan defaults or a delay in repayment of loans. Or if you look at cards and payments industry, again, they'll be impacted because people are spending less time on travel, leisure, entertainment, and so on. Similarly, mortgage industry will also get impacted. We are already seeing lower percentage of new mortgages and many refinancing of existing mortgages. So net in the short term, they will be impacted, but it's difficult to say how it will translate into in terms of IT spend at this stage.
Thank you, Praveen. Praveen, Sankalp had an additional question on flexible pricing, if you could take that.
I think we have to deal with everything on a case by case basis. Obviously, there are many levers. See, end of the day, client has an objective, and in these times we have to help the client in meeting objectives. Pricing is just one lever, but there are a lot of levers. We have tons of ideas in terms of taking cost out and providing benefits to the client. So I think we should be able to help our clients meeting their objective without compromising on our needs.
Thank you, Praveen, for taking that question. Our next question is from Sarita from Bloomberg. Sarita, hi. Okay, Sarita, we can't hear you.
Can you hear me now?
Yes.
Okay. So, hi Salil, hi Praveen, hi Nilanjan. I have two very short questions. My first question is to Salil, and it's, you talked earlier about clients looking to move contracts and consolidating with bigger players, especially because of security. But we've seen bigger players also being hit by security concerns. So are there any specific things that you're doing, Salil, to sort of make sure that your security is top notch? And my second question to Praveen, you said the new normal is a certain level of employees continuing to work from home. Praveen, I wanted to ask you now, the staff, there are going to be a lot of staffing challenges with the international borders being closed, suspension of H-1B visas, travel restrictions. How do you see all of this play into your operations, including, work from home? Because the work from home situation, as you explained, seems quite a sort of a hack situation with employees carrying documents and UPS's home. So how is all that affecting your operations?
Hi, Sarita. This is Salil. Let me start off. I think for what you asked before, I think my sense is that clients are really looking to work with partners that they can trust. My sense already with some discussions is they will consolidate some of the smaller vendors out and go with players who they can trust with delivery, not only security, which Praveen will address as well as to how we are looking at it, but also financial stability, a very strong, cohesive management team, and really someone who has stood by them for everything. So these are the sorts of conversations I'm already starting to see. And that's why I feel some of that consolidation will start to happen. And there I feel that Infosys will be a beneficiary. As I said, Praveen will share a little bit on the security, but just one point that you mentioned in your second question before Praveen answers that as well. What will happen in this new model? See, one of the things that we've done over the past several years is started to build out these new digital centers in the US and Europe and in Asia Pacific. I think those centers are also going to play a very positive role in how this is starting to come together. Even as we do remote working, some of the work I think will naturally be done at these digital centers, in addition to the work that, of course, we do from our centers in India. So that investment that we made, at least in the way we are seeing it, we think we'll be able to better leverage it in this sort of an environment. Over to you, Praveen.
Yeah. In terms of security, I mean, first thing I want to clarify is whatever has happened with this ransomware threat, it has nothing to do with work from home. If I look at the vulnerability, it could have happened anywhere, irrespective of work from home, because it exploited it exploited a particular lacuna in one of the versions of a particular product. So it has nothing to do with work from home. So having said that, obviously we have to invest a lot more in security controls. We have to make sure that we invest in advanced threat protection software. All your endpoints are protected, your networks are protected, email gateways are protected. Then we have to also invest in threat detection capability. These are both tools and technologies, as well as there are a lot of intelligence which you can gather by investing in this threat detection thing. And then you have to continuously monitor, because every time you come up with new tools to secure your networks, there'll always be players trying to beat those things as well. So this is not a one-step thing. This is a thing where you have to continue to invest and continue to monitor. And again, as I said earlier, this has nothing to do with work from home. Probably work from home may have a higher impact, less from a security perspective, but more from phishing attacks, or probably more from data leakage rather than some security thing. The security breaches can happen even when you're working in office if there are some vulnerability. Now on the work new normal of working, obviously, I mean, there are many possibilities, right? Now, if remote way of working is established, then in some sense it dulls the border between on-site and offshore, right? I mean, if you can work remote, you can work in India, you can work anywhere else. But to that extent, I think it can even promote truly borderless way of developing software and so on. You could also see more of work done wherever talent is available, kind of thing. Because end of the day, people are working in a remote fashion. Second one is when clients get used to it, and if you are able to prove that we are able to work from home without compromising on the integrity or productivity or security, then obviously the earlier notion of ODCs and other things will also start going away, and we may slowly start seeing more of virtual ODC kind of concepts, kind of thing. So there are many possibilities that is possible in the new ways of working. But again, as I said earlier, technically it is possible, but there are a lot of adjustments you need to make. And you are absolutely right. I mean, you have to invest in infrastructure in the last mile as well. Without that investment, it is becoming, I mean, it cannot be very productive. But if this is the new normal, I am sure everyone will invest. The last mile will become better. People will invest in better, maybe UPSs at home and things like that. So I think it's only a question of getting used to the normal if that is the new normal.
Thank you, Praveen. Our next question is from Srinath from Financial Express, and I'm going to read it out. Nilanjan, this is for you. Nilanjan in the beginning mentioned about payment extensions by a few clients. Who are they? How big are they? Which sectors and geographies are they from? And how will it impact the Q1 FY21 quarter numbers?
Yeah, so like I mentioned, these are just very initial conversations. Some of them are from retail sectors. So these are just in initial discussion phases. And like I said, in Q1 itself, in the month of March, we had record collections as well. So we will take this case by case, right? It may be a temporary increase, but like I said, there's nothing overtly we need to be concerned about. We've in fact brought down our DSOs in the last quarter from, by 4 days by the end of March, when actually COVID was at its peak in the month of March. So we'd watch the situation carefully and, handle it case by case. We have a very strong balance sheet, like I said, $3.6 billion. So not too concerned.
Thank you, Nilanjan. For our last question, I'm going to try Debashish from Business Standard once again. Hi, Debashish. Okay, unable to hear Debashish. So for the last question, I'm going to accommodate one of Swati's questions, Praveen. Swati has a question about involuntary attrition split up. What percentage is voluntary and involuntary in FY20?
I have data for Q4. I don't have data for FY20. In Q4, on a standalone basis, our overall attrition was 18.2%. It marginally increased as compared to Q3, but involuntary was down at 50, was much lower. It was 15.1%, about 50 basis points lower than what it was in Q3.
Thank you so much, everybody. And with that, we are going to conclude this press conference. As we sign off, I want to inform everybody that the archived webcast of this conference will be available on the Infosys website from 8 o'clock today. Thank you once again for joining us. Thank you, Salil, Praveen, and Nilanjan for your time. Thanks, everybody, and stay safe. Take care. This is us signing off.
Thank you, everyone.